Hello, everyone. Welcome to my fabulous world. I'm still in Cyprus, enjoying the place. It is such a beautiful place. I'm loving the food. I'm loving the weather. Of course, it's hot, and that works for me. Damien, I've enjoyed being here and also enjoyed learning from you. Thank you so much for the lessons. I mean, the past episode was really interesting, and you promised that we'll do something practical so that we can learn better about trading.
Well, you said make something practical, but you said make it fun.
Yeah.
Okay, so I had to think it through. You know, what can we do to give a little bit of insight into trading? Mm-hmm. And the idea we've come up with, and it's going to involve you, by the way, is we're going to create two portfolios. And what we're going to do is we're going to demonstrate some of the randomness of the market. And in the first portfolio, we're going to select 3 of our market strategists. Okay. So these are clever professionals that trade regularly, constantly watch the markets. You know, they're on television. Mm-hmm. They're always thinking about trade ideas. So we're going to select 3 trades, 1 from each of them. And then we're going to ask you to put on 3 trades.
What, am I competing with them?
You're going to be competing with them.
Oh.
And we're going to see how it goes. And the way we're going to do it is we're going to find a random way for you to put on trades, so there's no way that you can sort of guess it. And then what we're going to do is we're going to measure the portfolios over the coming couple of months. You can then share that with your audience. And what it's going to show us is it's going to show us that there's a chance that your portfolio may perform better.
So luck can work.
Absolutely, luck can play a part. I mean, that might be the reason for you believing that you're a professional trader. But nonetheless, it's one approach. And we're also going to look at our strategists and the trades they suggest. And of course, experts aren't always right.
Yeah.
Over the long run, there's no question that the experts' portfolios will perform better than someone that's producing a portfolio from luck. But nonetheless, we'll put the experiment on and hopefully it'll be a bit of fun for your viewers.
Great. Let's go for it. I'd like to see how that works, how I do the random choice.
All right, so it's fairly straightforward. We're going to ask you to throw a dart.
Okay.
Okay.
I've never thrown a dart in my life.
That's good. That makes it more random. And you're going to throw a dart at a board, and the board is color-coded.
Okay.
And each segment of the board represents a particular trade. Whether you're going to go long Bitcoin, you're going to go short dollar euro, who knows what it is? You won't know. I know.
Okay.
So we'll get you to go to the board, throw the darts, and whatever trades come on, we're going to put into your portfolio. So in that way, we're generating true randomness. Okay.
Good. And it has to be within the circle in one of
Absolutely. So if you miss the board, doesn't count. If you're between colors, it doesn't count. And it has to stick.
Okay.
So part of you has to learn a little bit how to throw a dart.
Okay. I'm ready for it. I'm ready for it.
So I'm going to introduce now our 3 market strategists. So it's Weil Macram, we have Michael Stark, and we have Terence Hove. Weil Macram is a financial market strategist lead at Exness. He's a certified investment management analyst by the Investment and Wealth Institute and the Wharton School at University of Pennsylvania, and he's an associate member of the Chartered Institute of Securities and Investments.
Hello, Professor. Hello, Damien. I hope you're doing great. So my trading idea is to sell gold at market. I still believe inflation will be more resilient and the Federal Reserve will have to raise interest rates one more time, which will create alternative opportunities than gold. From a technical analysis perspective, I see gold trading in a downward channel. My first target is at 1840 and my stop loss is at 1985.
Michael Stark has been investing for over 15 years and trading CFDs for the last 10 years. He favours consideration of both fundamental analysis and technical analysis where possible.
Hello both, and thanks very much, Damien, for the introduction. Yes, the idea is a possible buy for American light oil from the area around $87. And the primary rationale for that, in terms of fundamentals, is supply and demand, with supply being lower extension of the voluntary cuts among OPEC Plus, combined with the USA being unlikely to pump very much more to try to cover part of that shortfall, then it certainly looks like we might go into a deficit in the oil market if this situation continues. Meanwhile, the focus on recession, or possibly serious recession, has definitely receded, and a lot fewer participants in markets are expecting something like that to occur within the near future at least. Now, if we look at the chart, it seems that there might be 3 phases of this possible movement up by American light oil. Phase 1 would be a move up to the area around $90, a relatively swift movement, and then phase 2 could be consolidation and possibly a small retracement from there. And then phase 3, fairly high momentum but relatively longer term movement up to the area around $100. The problem with this is that sentiment for crude oil can change very quickly, so it's important to monitor such a trade very actively and monitor sentiment both generally in markets and also specifically on the outlook for supply and demand.
Terence Hove is a financial market specialist with over a decade of experience in finance and investment sector. His in-depth knowledge of the markets includes specialized skill sets such as foreign exchange, spot trading, forwards and swaps, and he has fixed income experience with bonds, interest rate swaps, and forward rate agreements. Terence is the senior financial market strategist for the sub-Saharan African region.
Thanks, Damien. Given the elevated inflation in the US and the response by the US Fed to curb that inflation by increasing interest rates, and with them signaling earlier in the year, around July, that there were further 2 interest rate increases to come in the year 2023, I saw that selling pressure was going to mount in the US tech, i.e. the Nasdaq 100. Hence the decision I made to short the indice. Thanks.
Okay, so you can see the expert portfolio funded with $5,000, and Weil recommended that we short gold, and he put some control parameters around that. So we're gonna sell gold. He wanted to put a stop loss at a level of 1985 and a take profit at 1840. So that's his position on. Terence recommended we short Nasdaq, the tech sector. Sell US tech. And Michael recommended we buy oil. So there you go. You can see our 3 orders here in the expert portfolio. Okay, Katie, are you ready for this? Please
Yeah.
stand on the line.
Yeah.
You see the dartboard in front of you?
I do.
Yep.
But who's that?
It's Michaelakis, which means little Michael.
Okay.
He's still waiting for his trades to come good.
Isn't that bad?
Red or black?
Red.
Okay, off you go.
Right. Oh.
That's just about green.
Okay, I'll take black this time. Let's see. Ah, green.
That's not supposed to happen. Green again, but it's random.
Oh
You know
no.
what? We need to redo this. It can't all go to green.
No. Let's throw again. I mean, I've got 3 more dots.
Okay, new rule. We're going to count that as green. So that's 3 greens.
Yep.
All right, I'll tell you what that trade is afterwards.
Okay. Aha!
That's yellow.
Yellow.
It's interesting combination there.
I'm getting this dot thing, throwing a dot thing. Right. Aha! Navy blue.
And blue, okay. Well, Hetty, I mean, that's kind of impressive considering you've never thrown a dart in your life. You managed to throw 3 greens. And for that one, you're going to go long dollar yen. Yen is the Japanese currency, and long means you're going to buy dollar versus yen. So you want the dollar to appreciate versus the yen.
Correct.
Okay, you also threw dark blue, and the dark blue here means, again, another currency. This time you're going to go long euro versus dollar.
Right.
Okay.
I want the dollar to
So you're going to
appreciate.
buy euro, and you want the euro to appreciate versus the dollar.
Okay.
And then finally, you threw yellow, and I know you think that was gold.
I thought so.
Yeah, but it's not, because I've been clever with this thing, you see. And actually, this one is to go short GBP USD,
Okay.
okay, for the British pound, dollar versus the British pound.
Okay.
Now, interestingly enough, those trades, and they were randomized,
Yes.
but they happen to be totally different to the trades that our strategists put on, which were largely commodities
Yeah.
and indices related. So let's see how the portfolio performs in a couple of months.
Yes. It's interesting that I went Forex.
Yeah, well, maybe
my random selection.
maybe
went
maybe you're a natural, maybe you're drawn to it, or maybe it's just beginner's luck.
Forex. Who knows? Maybe my ancestors are with me.
A few moments later.
So now we're going to go across to Professor portfolio, and in this case she threw the darts and all the darts came up as foreign exchange instruments. So first of all we're going to go long, so we're going to buy dollar yen. That trade is on. We're also going to short GBP USD, so Great British Pound against the US dollar. And we're going to go long euro dollar, buy euro dollar. Okay, so there's the 3 trades here for Professor's portfolio, and we've got the 3 trades here on the Expert portfolio. Let's see how they perform.